Welcome into a daily editorial here on the KE Report. In this daily editorial, I am chatting with Jordan Roy-Byrne. He is the founder and editor of The Daily Gold. Jordan, what I first want to talk about is something we've been covering a fair bit today and even this week, and that is the U.S. dollar and the general pullback that the dollar has been in ever since it peaked out on, let's say, middle of August, right around that 96, well, almost 97 level. We are back down below 95 on the dollar index. What are some technical levels and technical factors that you're watching for this dollar pullback?
Well, to answer your question, the 200-day moving average, simply put, the dollar had this bullish breakout. It had an upside target minimum of 98 and then 101. And the fact that the breakout point was, I want to say 95 or a little bit higher than that. And so the dollar went up to nearly 97 and then it came back down. It went back below the breakout point. So it retested previous resistance, which should have been support, and it sliced through that to the downside. So, I mean, it is a bearish development, but only in the short term because the dollar is still a ways above its 200-day moving average, which is at 92.34 and sloping up. So that's going to move higher slowly but surely. Looking at the price action in the dollar, there's strong support right around 93.00. The dollar, it is around 94.55. So I think it could possibly fall down to about 93.00. So that's the downside that I'm looking for here in the short term. And not by coincidence, I should say. You know, we see precious metals have started this rebound. And so it's not a surprise that we see precious metals are rebounding as the dollar itself is correcting.
So, Jordan, regarding this rebound in the precious metals, gold really just had one good day of a rebound last Friday. But when you look at silver and GDX, let's first focus on silver, though. That really hasn't done much. It continues to be very much or very close to being in breakdown mode, continuing that fall below most of the levels that it had traded in for the last year and a half, almost 2 years now.
Yeah, and the one thing we have to remember about silver and also the gold stocks, they had a critical technical breakdown, and they were trading in a range for almost 18 months. So the primary trend here is definitely lower, and they had this significant breakdown, and the market got extremely oversold. And so we're seeing a relief rally now. We're seeing, sentiment is moving from extremes. I mean, there's still more to go, but sentiment is going to move from extremely bearish to, only slightly bearish or maybe even neutral, depending on how far this rally goes. But, Corey, there's, silver's trading at 14.71 right now. Yesterday, it got up close to 15, reverse course. Looking at the chart, there's strong resistance in the mid-15s. I mean, around 1550, maybe 1560. That's the area which I think this rally can ultimately go to. So I think there's some more upside. But as you noted, I mean, since we hit the low in the middle of August, I mean, the price action has been very weak. I mean, this is not the start of a new bull market or a major rally, in my opinion. This is a, relief rally, a counter trend move, and it still has more to go as far as price and time. But there's really nothing here that tells me I want to be bullish on silver or I want to get long silver. Again, the precious metal sector was consolidating for around 18 months, had a significant breakdown, and that breakdown move did not go all the way down to the measured downside targets that we were looking for silver and the gold stocks. So that tells me that there's going to be another leg down here. Now, I don't have a crystal ball, so I can't tell you if that move lower is going to start in a couple weeks or a couple months, but I'm confident that it will at some point. We'll just have to continue to watch the market here. Again, I think the short-term trend is still probably higher for precious metals. I think there's more to go here at price and time, but the bigger picture is definitely bearish. So don't get too excited with what's happening right now.
So, Jordan, one very successful trade that you made not that long ago is actually shorting this sector through some of the ETFs to short the ETFs that follow the stocks. Does that mean that you're going to be shorting now, or are you still waiting for a better setup to get into some of those short positions again?
I'm waiting for a better setup. I mean, it's way too early to go in again on the short side, just because, looking at the breadth indicators, the sentiment indicators, they need to reset back towards neutral, I would say. So I'm obviously, I don't want to say I'm eager to short again, but I'm still very patient. I mean, I think there's going to be another opportunity to go short before the end of the year, but again, I don't know exactly when that's going to be. We just have to wait and let the market and these indicators, give us a sense of when that might be. Maybe in early October, maybe at the end of September. I don't know. But I think it's going to take some time for it to develop. But like I said, the primary trend is down, and silver and the gold stocks have not come down to their measured downside targets yet. Which for silver, I think, is in the low 13s. And then GDX, for example, is about 16.5. GDXJ, depending on how you measure it, could be 23 or 24. So, again, no rush to go short again, but I think there will be an opportunity at some point in the next couple months.
It really speaks to the position that we're in for the precious metals, and something that a lot of the gold bugs talked about, a lot of what we have covered too, is this general oversold condition, this unloved market, bad sentiment numbers. People sometimes point to those and say, you know what, that means that it's due for a bounce, a pop higher. Sometimes, though, to work off some of these oversold conditions, what you get is just kind of a sideways, boring move as the oversold condition slowly grinds back up to neutral, which unfortunately then sets it up for another pullback. Do you think that's what we're setting up here?
Yes, and that's a great point that you made, because when trends get really strong, the counter trend moves don't really go that far. They can happen in price and time. I mean, it can be all in price, or like you said, it can be a consolidation where the price rebound in a downtrend is not that significant, but it's significant as far as time, where it goes back and forth, just consolidating over time. And that's how the oversold conditions kind of reset. But that's a great point. It reminds me of something a buddy of mine said to me recently, where he said, bearish sentiment within a bear market or a downtrend is not bullish. So, that it's hard to dispute that. I would say if you get extremely bearish sentiment in an extremely oversold market within a bear market and a downtrend, then sure, that market can bounce and rally. But in the bigger picture, if the market's in a downtrend or a bear market, I guess they're kind of the same thing. But bearish sentiment is not going to help you that much. I mean, it's going to tell you that the downside move is probably exhausted and needs a rest, but it's not necessarily going to tell you that the market is ready for this, major reflex rally. I just, that will come at some point. Unfortunately, we'd have to get even a lot more oversold. But I mean, you said it, Corey. That's a great point. I mean, when you're rebounding from a really oversold condition, in an over bearish sentiment condition, the market, when the larger trend is down, and strongly so, the corrective move doesn't have to be this massive rally. It can just be a little rally that goes sideways for a long time. And then these indicators, maybe they won't even go to neutral. They'll just go from really bearish to mildly bearish. But these things, they all come with the time and experience of reading a market and understanding how things can move and where trends are, and how the price action in the market is really acting.
Jordan, one more comment, and that is dealing with the longer term charts. I'm looking at the monthly chart for gold, and you go the whole way back to 2011 when gold reached about 1900 in August, September. So we're pretty much on the anniversary of this, and it has been for the most part down, down, down. We got that bounce in 2016, which is maybe showing to be just nothing more than a dead cat bounce, and now we are 7 years from that most recent peak in terms of all-time highs. What does this mean to you with the consideration of the overall time frame of this bear market?
Well, it's a great question, because people have been saying, some gold bugs and bulls have been saying, well, this is like the 74 to 75, 45% correction in gold. Well, no, it's not, because this has been going on, as you said, for 7 years. That was like 18 months or 20 months. So you can't say it's like that. And at the same time, this is not the situation that we had in the early 80s when they were able to jack up real interest rates massively and gold had went up 25x in the 70s. I mean, gold did not go up 25x. It did not have that much of a blow-off top compared to other blow-off tops like we saw in gold and 80 and oil in 2008. So it's kind of, I don't think you can say gold's in a secular bear market. But you can't just say, oh, well, this is just a run-of-the-mill bear market, because as you said, it's been going on for 7 years. Looking at the monthly chart, it tells us that, we're making a bottom here because gold was down 5 months in a row. We're setting up a bullish hammer. So that's all well and good. But, I mean, the larger trend is still down. I mean, gold has broken below the 20-month moving average, the 40-month moving average, and, of course, the 200-day as well. So looking at this chart, Corey, I mean, what I'm focusing on when I want to be bullish is we've talked about it fundamentally, and that's when the Fed is going to change their policy. They're going to stop hiking. Now, other factors, Corey, will tell us, is gold going to rally, 50% from that point, or is it going to go back to 2000 and, that's going to be the big boom we've all been waiting for? We don't know. But what I do think we can say is the turning point will be, at least initially, when the Fed shifts course. Now, looking at the chart of gold, we have really strong support around, around of course, we have 1040, 1040, the recent low. If you look at the monthly chart, you look at it very closely. There's a lot of support around 970, 980. That's even something Jim Rogers has been talking about. He said if gold goes to 1,000 or a little bit below, that's when he's going to be buying. Obviously, nobody can predict the future, but I will say Jim Rogers, more than anyone by far, he has nailed what's been going on in gold since the mid-2000s. And he's been saying when it goes to 1,000 or a little bit below, that's when I'm going to buy. Now, looking at the monthly chart, Corey, that's where the next strongest support is. It's right around 1,000 or a little bit below. So that combination, Corey, if we test that region around the time that the Fed is done hiking and maybe they're going to pause and move to a cut eventually, that's the time when we want to be super bullish on gold. Until we get to that point, the monthly chart is broken. The primary trend is down, and there's some strong support on the low 1100s, but there really isn't that much support, from a monthly perspective. There really isn't that much strong support until we get to 1040 or a little bit below that.
All right. Well, Jordan, some interesting comments and something that we have talked about a number of times, and that is the fact that we really need the Fed to switch course or at least stop the rate hikes. Maybe that'll happen next year when they reach a neutral rate, but up until then, very much on course to continue these rate hikes. And one thing to consider about these oversold conditions is what we said. Sometimes you don't get that pop, you just get that sideways movement. So, Jordan, thanks again for your time. Have a great rest of your week.